Welcome back. I'm Brandon, the HBAR Bull, once again joined by Zepsi. We both do some contract work for the HBAR Foundation, but we don't do these weekly updates in any official capacity. We're just coming to you personally to give you the latest in the Hedera ecosystem. Welcome back, Zep.
How's it going, Brandon?
It's going good. We have a lot of good stuff to get into, but as always, none of this is financial advice. Use it for entertainment or educational purposes only. So, the first thing I wanted to cover is Carbonbase. Some big news came out this week. I caught up with Max Song. He is their CEO, and he had some fantastic insights. I think this space is going to pretty much shock the crypto industry as a whole. I think they're looking over it right now, but as time goes on and some of the things that Hedera does really starts to catch hold, I think it's going to have a huge impact. So listen to what Max had to say. Welcome, Max.
Nice to be here.
Yeah, thank you for coming. So, Max, can you explain what Carbonbase is and what your goals are?
Of course. So, we're living through one of the greatest challenges in human history, which is the climate change sustainability problem. And Carbonbase was started off of the understanding that actually Web3 has an important role to play in addressing this problem. In fact, we sort of take a lot of metaphorical inspiration from the way that Bitcoin and Ethereum are organized in actually creating not only like a company, but also an economy where people who particularly contribute in a certain way get rewarded great economic support. And our key inspiration is being able to create the same type of economy around climate mitigation using the tools and also the principles of blockchain.
And with Hedera's focus on, the Guardian and everything else that's happening in that ecosystem, it seems like you're in the right place. The Hedera community, though, they get excited about high network utilization, enterprise adoption, and in general, changing the world for the better. Understanding this, why should they be excited about Carbonbase?
So, Hedera has been a flagship leader in actually investing in climate solutions. Wes and his team have actually invested hundreds of thousands, millions of dollars actually into supporting all kinds of projects along the value chain. And in particular, they've created something called the Guardian, which is kind of an open source repository of some of the best tools to organize digital project submission, verification, and then credit origination. So what we are doing with this partnership is actually we're building one of the first completely on-chain blockchain implementations of a carbon registry. And for those of the audience who are not familiar with this, this is kind of the cornerstone of the entire carbon market is actually the idea of a registry. There are 4 of them in the world today that are of scale. 3 of them based in the United States, 1 of them based in Switzerland, and based in Hong Kong. We hope to build actually the world's 5th registry and make that the first digital on-chain version. The other 4 are running on traditional databases. And I think this taps into Hedera's kind of core strengths, right? On one hand, you have a very strong set of large enterprise validators that have most of them committed to aggressive climate change goals. So this is already something part of their corporate strategy and something that their board of directors cares about. A second piece, and this comes from my own experience in institutional finance, is actually this is where huge money flows are going to go in the next few years, right? China alone is going to have to spend between 17 to 25 trillion dollars to meet the climate change solutions. US is probably a similar scale, about 25 trillion or so. And then the other countries collectively probably need to spend maybe 100 to 150 trillion. So that's a lot of money, right? The crypto market cap today is, let's say, $1.5 trillion. And the green bond market actually already issued today, is also $1.5 trillion. So I think people who are sort of not that deep into this may not have seen the size of scale investment that climate change requires. And I think this is where this gets really exciting. How do we actually show to the larger, let's call it real world economy, that blockchain is here for something more than just speculation? It's actually addressing kind of the key philosophical human societal issues, climate change kind of being the forefront of that. I think this is where these 2 worlds are going to meet together. And we're very excited to work with Hedera and Hedera's extended ecosystem to actually make that match happen. And we believe, after spending so much time with all these important stakeholders, that Hedera actually has the perfect DNA, perfect kind of community to make that happen as well.
Excellent. And that's what I say all the time is we're looking for real value add use cases outside of speculation. And that's really what's going to take us to the next level. But Max, what are some of the next steps for Carbonbase?
Definitely. So we're very excited to hopefully before the end of this year launch our first working kind of product, right? Having the ability to have project developers come to us, register projects in a digital fashion, have validation happen on chain with sort of ledger-based recording on the Hedera blockchain, and then receive credits. And on the other side, working with large companies, actually getting them comfortable with buying a digital issued credit as opposed to a traditional one. And from there, I think it's going to get really exciting really fast. Already, we've spoken to 20 plus project developers, and many of them are frustrated with the ability to process their applications. Right, there's this giant backlog sitting out there that's kind of immobilized. And then on the other dimension, the creation of on-chain green finance, I think, is going to be very substantial. And so even earlier this year, we were at ECC talking to large institutional investors, and they were very excited about the idea that there could be grassroots level community-led digital MRV that then feeds into the reporting of the projects, counterbalancing the recent credibility questions, right, that have come around the carbon markets. So I think these two things are going to really kind of be the core drivers for us. And then I think the final thing is we really want to engage more of the Hedera ecosystem, right? There's so many other great companies and developers and communities out there that are already building on the chain. Like, we hope that this could be a resource in terms of sustainability for their other businesses, right? Whether it be enterprises, loyalty programs, CBDCs, or even NFTs. I think this is kind of touching the broad gamut. And the last thought I want to leave with you, just kind of as a little thing for people to look into, is something called Ministry for the Future. So this is a book that came out. It's a climate change science fiction book. And behind the book is an idea called carbon quantitative easing. And for the uninitiated, I was going to leave these keywords there. But for me, this is going to be one of the most significant monetary policies around climate change in the future, and something we hope to sort of tie into the work we do with kind of on-chain green finance.
Well, Max, I think you found a good home in Hedera. I think that not only have you found potential customers, but there's going to be other collaborators out there. Thank you so much for swinging by and giving us the inside track on Carbonbase.
Thank you so much, Brandon.
I think the first thing to re-highlight there that Max said is the perfect positioning of the Hedera network for sustainability and ESG related use cases. And that is due to the nature of this governing council structure, whereby every single one of the entities on that council has aggressive climate goals to meet. And even the universities, they're extremely active in this field of research. Against this backdrop, blockchain is proving itself as the greatest technology for robust, high quality, and auditable carbon offsets that will become the backbone of these markets, or are the main part of these markets. And so the customer base for carbon offsetting on a vast scale is already there, within our council. It just needs to be educated and handheld into it. With all of this in the background, it's important to understand that carbon registries like Carbonbase are at the fundamental pillar of these markets. They allocate this sort of unique serial numbers to credit. They monitor the credit ownership, and they record it on a ledger. And currently, these aren't DLTs. These are sort of your more traditional databases. And so when these credits are sold currently, the register will, in theory, retire it to prevent further purchases, prevent issues like double spending. But as we know, this hasn't really worked. The main 4 carbon registries at the moment that Max outlined at the start, none of them are on chain yet. And because of that, they all suffer from this issue of double spending. When you have, say, the same credit retired multiple times, thus making sort of every single retirement redundant apart from the first. And so currently, there's 4 global carbon registries. Like I said, the fundamental pillar of these markets to make these markets work. And I think the most fascinating part about that is that 2 of these, which are Gold Standard and Vera, are in close talks with the HBAR Foundation and the Sustainable Impact Fund team. So much so that Jonathan Rakov, who's the head of global policy at the HBAR Foundation, he has issued multiple policy contributions to them. And even last week or the week before, I believe, Vera, which is one of the global carbon registries mentioned, actually had a piece in one of their latest publications dedicated to Hedera, dedicated to DMRV on Hedera, dedicated to the Hedera Guardian, and mentioning the Hedera token service specifically as one of the greatest options for bringing the Vera VCUs, which is the verified carbon units that Vera produces, on chain. And so 2 of these 4 global carbon registries that already exist are in works with Hedera, but they're off chain currently. Now, the first one that is going directly on chain, Carbonbase, led by Max Song, has chosen Hedera, has chosen the Hedera Guardian, has chosen to envelop itself within our sustainable ecosystem. That's against other competitors like Celo, like Polkadot, Maxong, and Carbonbase have chosen Hedera as the first on-chain carbon repository, or registry rather. And so not only do you have two of the legacy carbon registries looking or having discussions with Hedera, but the first true on-chain one is also now built on Hedera. So I think it's safe to say that Hedera and The Guardian are probably positioning themselves as the home, at least in Web3, and Web3 seems inevitable for this industry, which is now looking like it's going to become $1 trillion market. So I think, like you said, Hedera is positioning itself for probably one of the most underrated utilities within Web3 at the moment, which is this sort of $1 trillion carbon registry, carbon credit, carbon offset market. The future is extremely bright for this particular use case, and what better start than having the first registry on-chain with Hedera.
Yeah, no question about that. And Carbonbase is certainly going to take the pole position. We're going to talk about this a little bit more with Rob Allen a little bit later on, but we're going to take one of our hard left turns, because one of the stories that popped up in the Hedera ecosystem a lot this week was around token unlocks. We even saw, and everything that I go into here is not financial advice. It's just my own opinions around some of these things. But even CoinDesk covered this. And, I was getting a lot of questions about it. So I dug into it and I found the source for why everybody thought that last night at 8 p.m. Eastern, there was going to be a token unlock is this website called tokenunlocks.app. And immediately once I started to look at it, I started to have questions. So I automatically went and took a look at the accounts that normally distribute these tokens, and they didn't seem set up for a distribution. And at 8 o'clock when it happened, there was no distribution that went out. Also, at the top of this website, it says the date of our quarterly HBAR unlocks is estimated by the network launch date. The actual date might be different from our unlock schedule. So I started with that. I asked a few people that usually know about these things, and they didn't know about an unlock. And then I looked at another thing on here, and it said the next upcoming event is November 30th. And I know for a fact that on September 17th, the last of the original SAFs, the SAFT 1, 2, and 3, barring the founders who have a longer unlock schedule, the last of those distributions go out on September 17th. So here's another place where I saw that it was incorrect. Pretty much all I want to say is I've been watching the HBAR markets for a very long time. And though when things are announced, like what we saw here, I think the HBAR price was impacted from the announcement of this, even though I think, unlike past announcements, this didn't actually occur, or it didn't seem like there was good information. Now, token unlocks, I'm reaching out to you. If you have any information on your methodology, please let me know. I don't want to misrepresent, but it doesn't seem like this was accurate. In the past, when I've seen these unlocks, they seem like non-events. When they're discussed beforehand, that can seem to have an impact, but the actual unlocks themselves don't have impact. And that's why I generally don't cover them, because I think it just causes confusion in the market. The other thing is you look at the different entities that they said these were going out to. It said network governance and operations. Is that Swirls Labs? Is that Hedera itself? It said purchase agreements. So that might be institutional investors. It says ecosystem and open source development. Now that could be things like the HBAR Foundation, that could be the Swiss Hashgraph Association. But even if they were getting distributions, these entities already have treasuries of HBAR. So they're not waiting on distributions to be able to go out and then sell it into the market. They have a sell schedule that they follow to help them facilitate doing what we want to see, building out the ecosystem, building out this network. So just in general, I know that, when you see someplace like CoinDesk make an announcement like this or put out a story like this, you think that's a reliable source. All the influencers out there don't necessarily think that's a reliable source. Go to people at Swirls Labs, go to more official places before you consider this. And think about what I said before, that these generally in the past have not had a lot of impact when the actual distributions take place. So just some things to consider. All right, Zep. So let's jump into something a little bit more fun. We'll get into Karate Combat. They're having their next event on September 16th down in the Dominican Republic. I do want to open up if anybody is in Puerto Rico, it's a quick jump, a quick flight over to the Dominican Republic or down there in Florida, or would just like to go down to Dominican Republic, we might be able to get you some tickets. We might even be able to get you some VIP tickets. And I've been to a few of these events. It is not something to miss. It is an amazing event, especially now that they have the up-only gaming. So reach out to me if you might be interested on the weekend of September 16th to go to that event, and we'll see if we can get you hooked up. The next thing, another giveaway that's going on, is from Hashpack and Vavelverse. Can you tell us about that, Zep?
Yeah, so Vavelverse we heard from as one of the first sort of gaming grantees of the foundation, almost probably a little over a year ago now. And they are a game that existed a while ago. They had a big following. They had a lot of users, a lot of active users, and they decided to sort of rebrand themselves and take themselves into the world of Web3. And so Vavelverse, as I understand, is a sort of collection of shared worlds, a collection of virtual worlds that will exist on the Hedera ledger for the purpose of bringing it into the world of Web3, and I think specifically through NFTs, so through the Hedera token service. And so they're getting ready to launch. And working with Hashback, I think through Hashback's new airdrop feature, they have got a new token ID that you can associate, which, as I understand, will be one of the NFTs that sort of work within this game. So if you go over to their page, go over to Hashtag's page, the token ID there is ready for you to associate it. It is 0.0.3527479. And you've got to get that done by September the 8th. And then I think you'll sort of have your keys to the Vavelverse. But I spoke to the team yesterday, and at about midday my time, they were still getting about 10 associations a minute. So I think that's a pretty good statistic there. And hopefully that means there'll be a lot of us ready to use this game when it comes out, I think, in the coming months.
Yeah, I need to get caught up with the Vavelverse team. We need to get them back on here pretty soon. But the Earthlings team, we just had them on last week. They're also doing a giveaway of some of their land in their gaming metaverse. And I actually helped them facilitate at least part of it. They're doing this with all kinds of different projects. But I did mine on Galaxy, and it was compared to Twitter and X or whatever, it was a joy because I knew that there were less bots that I had to deal with. I knew that most of the people that engaged were real people, but I just want to run through the list. It was the first 10 people who responded to that. We have Coinman, the H Barbarian. We have Trev's Place, Michael, Tata, Domi, First Echo, Planet Earth, Ray Martino, Hamling, and Daz. So all you guys make sure to associate token 0.0.3170783 to get on the whitelist for their land plots. So Zeb, the next thing we want to cover is for the broader crypto ecosystem, but of course it's going to impact the Hedera ecosystem as well. We caught up with the chief legal officer at the HBAR Foundation, George, to give us some information around the Greyscale ruling that just came out. Another favorable ruling within the crypto ecosystem. So let's catch up with George real quick. Thanks for stopping by again, George.
Always a pleasure, Brandon.
Yeah, absolutely. So we had another interesting development on the crypto judicial front. Can you tell us about the Greyscale ruling and the impact on our industry?
Yeah, so the Greyscale ruling, it's major for the potential for a Bitcoin spot ETF. What it was, Greyscale has been trying to convert its trust into an ETF for quite some time now, and the SEC rejected it. And Greyscale challenged that rejection in court, essentially saying, look, it doesn't make sense that you would reject our conversion when you allowed a spot market ETF for futures of Bitcoin. The underlying rationale by the SEC was that, well, the spot market for Bitcoin can easily be manipulated, and we have not received anything that gives us comfort, or we haven't seen something that gives us comfort in the form of like information sharing agreements between exchanges. So we're going to deny it. Well, Greyscale argued that doesn't make any sense because you allowed a futures Bitcoin ETF to go to market, and the futures market is highly dependent on the spot market. So if you're not comfortable with that there's not manipulation in the spot market, then how did you get comfortable with the futures Bitcoin ETF? And the court agreed. The Greyscale had an uphill battle. The standard of review for such a decision by the regulator is that the decision has to be arbitrary and capricious. That's a very high burden. And essentially the court said here the SEC's decision was arbitrary and capricious. Now we wait. It was a big victory, but it wasn't. It doesn't mean that automatically Grayscale's ETF is going to be converted to a spot market. Sorry, the trust is going to be converted to ETF. What it means is now the SEC has 45 days to decide what it wants to do. They could ask for an appeal, a review en banc of the decision. Unlikely that'll happen. Then it could come up with another reason to deny the application, Grayscale's application. Or lastly, it could revoke the approval of the futures-based ETFs, saying, "Hey, you're right. We're not comfortable, and we're sticking with that. So we're going to revoke that." I think that would be very messy. So all signs point to the likelihood of a Bitcoin spot market ETF being approved, but not in short order.
Now, I mean, this doesn't directly impact, say, Hedera or HBAR, but I think it shows that the judiciary is willing to have an open mind on these things, number one. And also, these kinds of assets, ETFs and things like that, this is just the beginning, okay? Bitcoin is always going to be first, and then Ethereum, and then it's going to roll on down the line. So it's just good for the industry, right?
It's great for the industry. I mean, we've already seen the applications for Ether-based futures ETFs. So the same, if that gets approved, then I presume the same thing is going to happen with Ether, right? So it's just more access to these investment vehicles to a broader market. So that's what it's providing. So that means more people are going to be coming into the industry. More folks will go down the rabbit hole that is crypto, and then just hopefully branch out into other projects like Hedera.
Yeah, understood. So in general, are we now seeing some momentum being gained towards our ultimate goal of getting regulatory clarity?
Yeah, I'm not sure that we're making progress on that front just yet. I mean, the arbitrary and capricious standard is as nebulous as the Howey standard, right? It's all facts and circumstances dependent, and we just find ourselves now in a position where the SEC has proven itself to not be infallible, right? It's now got 2 losses under its belt. We've got 2 wins, and hopefully this creates more momentum for the crypto industry, but also hopefully it gives the SEC pause and they start realizing maybe our approach isn't the best right now. We can't keep losing. That's a lot of resources that we're putting into these cases, and if we're going to be losing them, that's just bad precedent. Nobody likes a loser. So let's rethink our strategy, and hopefully, if that happens, that's how we get clarity.
All right, and I hope it ends up that we get some reasonable regulation like we're seeing throughout the rest of the world. George, thank you so much again for swinging by. We really appreciate it.
Thanks, Brandon.
And Zep, on top of the Greyscale news, there was actually another ruling that came out that was kind of in favor of the DeFi ecosystem. I haven't dug into it too far, but we'll see if we can get George back next week to give us some additional insights. We're not going to waste any more time. We're going to get right into Sharkbites here. Rob had some great information he wanted to share, so let's jump into it. How's your week going, Rob?
Hey, Brandon. It's a busy one as usual, but always fun.
Yeah, this week has been fun. I've had some good interviews, but I'm looking forward to our conversation as well. We'll start off with a question from iSheep225. He said, Memcom recently disclosed to have refused a governing council seat to a candidate after extensive discussions. They said objective criteria were not met and no exception would be made or granted in this particular case. What are these objective criteria? Now, I know, Rob, you were on the governing council for a time, and I'm not sure how much you're going to be able to talk about it, but can you give any insights to iSheep225?
iSheep225 is a very good question. So the membership committee is a subcommittee of the governing council that's expressly constituted to drive recruitment. And as Mance has said many times, the more governing council members we get on board, the greater the specificity around those characteristics we're looking for. We don't want a governing council full of banks. We don't want a governing council full of Silicon Valley tech giants. We need to diversify. The superpower for Hedera is, and the key innovation in my view, other than Lehman's invention, is the governing council, as we keep saying. So the membership committee, MEMCOM, is charged with ensuring that level of decentralization, diversification of the governing council members is maintained. And I'm not saying that another bank wouldn't be put onto the governing council. I'm not suggesting that the one that is being referred to here was a bank. I don't know. But as we get fewer and fewer seats left vacant, the objectivity of those gaps that we still have gaps across sectors, across geographies, need to be focused on. So I've sat on membership committee, and the chairs there, the co-chairs, are very clear that that this is the case. Now, what they're looking for is well-known companies, ideally public companies, Fortune 500 or Global 2000 or their equivalents in the not-for-profit sector or the academic sectors. And increasingly, in fact, entirely now, it used to not be the case, but they all need to come with use cases. They need to have had the ideation around what they're going to do with Hedera. And when they pitch to MemComp, usually supported by one of the organizations that's charged with recruitment, such as the Hashgraph Association or the HBAR Foundation, or sometimes through referrals from Swelds or Hedera itself. They come with a pitch. They come with an idea about why they're joining. They need to understand what Hedera is and what it's going to be, and strategically where it aligns with their own business. So it used to be the case that there were potential governing council members that kind of wanted to just come along and enjoy the ride or dip their toe in the water. That's no longer the case. Every single one needs to have a very strong use case. And as is the case here, and I don't know the details, I suspect it didn't quite make the mark. It may have been a very, very strong potential candidate without a use case. It may have had a very good use case, but could have been kind of duplicate type of business. And I think this is really, really strong, right? Because, the one from many Visa model that Mance was inspired by, the governance model that we've applied to Hedera needs to be maintained, needs to be strengthened over time, because, like I say, it is a superpower for the network.
So, Rob, I have a question. You said that these council members are coming and pitching Hedera. Now, I know early on it was the exact opposite, right?
Sure.
Hedera was pitching the council. Has that kind of flipped at this point?
Yeah, absolutely. There are. I think there's the usual origination that has always been the case. You get internal champions, you get network connectivity between people. We've got a growing ecosystem, so there's a lot more touch points now. A lot more people have been part of corporate life or academic life, and they come with relationships, and they see the overlap, the potential of an organization joining the governing council. But that introduction now has a process. It has a trial by fire, if you like, through the membership committee, such that even big companies aren't making the grade now. And the pipeline is very long. So there's kind of a meticulousness around the membership committee process where only the best get through.
Well, I hope if they were coming with a use case, whoever they were talking about here, that they continue to pursue that use case, even though they didn't make it onto the Hedera Governing Council.
Well, of course, I mean, the Governing Council is one thing, but they can still pursue the use case. So it's not, that none of them come and say, oh, we'll go into the Governing Council, and if not, we'll go and select another chain. That just doesn't happen. What actually happens is they get referred to me at the Hashgraph Association and the Enterprise Program, or they talk to Shane at the foundation, and pursue that use case. So if they come to me, then we can onboard them and take them through the process, and it just reinforces their commitment. So potentially they come around again, and if there is a governing council seat available for that sector in that geography, then they have a better chance of joining at that point too.
Yeah, maybe they'll grow into it. So since you already mentioned the Hashgraph Association's Enterprise Program, do you have any updates on that?
Yeah, I mean, that was a neat segue, wasn't it? So we've been running the Enterprise Program since earlier in the year, when Hedera charged the Hashgraph Association with setting this new Enterprise Program up. We inherited the former process that the CorpCom, the Corporate Utilization Committee, had been set up to do. So much of the pipeline of enterprise projects was redirected into my program, and we've now got a machine to onboard and deliver these enterprise projects, which is really healthy. Can't name names, but we've got, I think, 5 big enterprises, 4 of which are governing council members currently in program, delivering a variety of use cases from identity to supply chain to rewards. So, some really nice, big, meaty, true enterprise use cases. We're onboarding another 6 right now, so that most of those have been approved via our grant committee process and are currently in the contracting stage. So we're about to kick off those projects. 3 of those, I think, are grant committee, a governing council, and we're getting a lot more stablecoin, payments-y infrastructure use cases as well. So that's really cool. But I'm most excited about the pipeline. We've got a qualified pipeline now where we're working to kind of shape the use cases, shape the propositions before they come into the onboarding process. So we try to make sure that the proposition, the use case, the ideas are reasonably well formed prior to coming throughout our onboarding process, leading up into the grant committee, because that does a lot of the heavy lifting up front. And so when we get into program, we can really focus on delivery and not spin wheels. And I'm a delivery guy, so my outcomes are, I prefer my outcomes to be on mainnet with beneficial outcome for the whole of the network. That said, we have been granted a limit on each of our enterprise projects. And enterprise projects tend to be quite big and expensive. So some of the time these are proofs of concept, and some, so they can be wide and short, and kind of a broad proof of concept that's proving a particular hypothesis within the business. Or they can be long and thin. They can be the Web3 enablement of existing platforms or features, or going taking a kind of go-to-market approach. And we're seeing quite a few of those as well, which is great because having a mainnet outcome is what we all seek. But even the proofs of concept are aligned with business strategies. So one of the things that I'm very clear about with all the projects is we need both a business strategy alignment so that there's every chance that it will continue out of proof of concept into production. And secondly, we need a business sponsor, someone who can advocate for and champion the project into production. So it's looking good. It's very, very strong pipeline, onboarding governing council members and their peers. We're looking at themes across all of the strong Hedera themes, so sustainability, on-chain finance, and consumer engagement. And very, very strong progress.
Well, Rob, we'd love to hear about your day job. We can't wait until you start to come on here and you can tell us about these things actually hitting mainnet and coming to market. All right, so the last thing that I wanted to get into is there's been some major developments in the Guardian ecosystem with Carbonbase, which I just interviewed, and Timeless as well. And you have that t-shirt on today. This seems to be right in your wheelhouse. Do you have any thoughts on what we heard come out this week around the Guardian ecosystem?
Yeah, it's great, isn't it? I mean, we've talked a lot about Guardian. Wes has been pushing this for 18 months, 2 years now, and we're starting to see the products come to market. We've seen the Guardian itself, and then Vision's managed Guardian service. We've seen Tolem Earth in the marketplace, and we've seen a lot of stuff coming out of Miko and the wallets and the custody side. But it's great now that the composability of the Guardian token, the Lego bricks that are being put in place, are being assembled in ways that have kind of commerciality as well. So the Carbonbase registry has a very focused commercial outcome in terms of being the first carbon registry in Asia Pacific, in this region. As Max said, the majority of the well-known large carbon registries are either in the US or in Europe. So there's 3 in the US, in California, and one in Switzerland. So the Asia-Pacific region, which is responsible for over half of the world's emissions, doesn't have a registry, doesn't have a way of establishing the credits that are necessary within an issued registry to drive the markets and the offsetting that is necessary to achieve a positive climate outcome. So that's amazing. It's an amazing site as well. So I encourage everyone to go and look at it. It's beautifully designed. It's really articulate, and it's all backed by Guardian. So the other thing that I'm seeing now is that these layers on top of Guardian are kind of abstracting away. They're kind of talking to the positive benefits of the things that we've been mentioning for years now around both Hedera and Guardian. But the abstraction is just, it doesn't have to refer to it. It's just talking about the benefits. So that's great. And then Timeless in the same week has launched Carbon Central. Again, this composability of the Guardian ecosystem allows for businesses in different regions to adopt the same innovation and overlap in their own sector, or to bring a slightly different proposition to market. And Timeless are one of the OGs in the Guardian space. They're one of the biggest contributors into the Guardian repo. They're actually an Australian stock exchange listed business. So, they're a very well-established business in Australia. And their focus is around projects and project management, so sustainability projects, and how to help those projects tokenize their credits and then bring them to market. So there's a kind of life cycle approach around projects, which Timeless is supporting with their Carbon Central project. So the synchronicity of the announcements, I think, was a coincidence. I believe it was a coincidence, although in Wes's world, everything is kind of is planned. So maybe not. But it's great to see. And I'm already working with Timeless, and I've been speaking to Max about a number of big opportunities that I'm seeing that can utilize both of those aspects. And then don't forget the likes of Fresh Supply are doing agricultural supply chain, which also aligns with Guardian as well. So emissions in supply chain in agriculture is part of that. Remember, Civic Ledger is doing water ledger, so everything that's built on Guardian is water related. Everything that's going on in Africa and elsewhere. So we're leaning into COP28 in November with an ever-accelerating ecosystem of Guardian partners who are now demonstrably bringing this to market rather than just the technology layers having been built. So it's a very, very exciting time in the Hedera sustainability space.
If anybody out there has any questions, make sure you drop them down in their comments so we can get to them next week. Rob, that's pretty much all we have. Is there anything else you'd like to pass on to the crew?
No. My daughter is very keen for me to go and Twidgetize her Barbie right now, so I better go.
There you go. All right, sounds good, Rob. We'll see you next week.
Thanks, mate. Bye.
So great to hear from Rob as always. And I believe a couple of weeks ago now, Rob briefly touched on what's going on in India with this hackathon that has been doing the rounds a bit on social media. And so Bharat Blockchain Yatra is the biggest ever blockchain confluence. And not only is it the biggest blockchain confluence ever, across the globe, but it is also has the premiere of the exclusive DLT blockchain sponsor, which is Hedera, via the Hashgraph Association. And so what this means is that over the course of 7 months across India, up and down India, over 50,000 Indian devs will be exposed to Hedera. That's not to say that they'll only learn about Hedera, but the hackathon at the end of that tunnel is exclusively for HBAR builders, as I understand. And that hackathon has a massive prize pool, especially when you adjust that to sort of the local economy within India. It's a huge amount of money. So I would imagine that the greatest developer minds that are interested in Web3 are all going to be competing for this. So that's just a vast amount of developer exposure. But the first big event, the first big educational event that is going on specifically for Hedera within this blockchain confluence is called Blockchain 101 events. And this is being held around various university campuses across India and is scheduled for the 26th to the 27th of October in Chennai, which is Asia's largest university auditorium, and there's over 3,500 people expected to attend that alone. So I think the scale of this hackathon, the scale of this blockchain confluence with Hedera as the primary sponsor is something for us really to keep an eye out on. I should have more information early next week, and I believe there'll be more information coming out from their side as well. But I thought I'd reiterate that this is a massive deal. A massive shout out to Rob and a massive shout out to Adinia, who I believe is leading that relationship at the Hashgraph Association.
Well, I think this is another thing that might be getting underestimated even within our community, but it's going to be exciting to watch it roll out. All right, so Rob got to one community question this week. He had a few other topics, but I wanted to touch on a couple other community questions that we got. The first one comes from Whitey in Vermont. He asked, will Hedera be working with or supporting BRICS? Will it be affected by BRICS if BRICS becomes successful? And what he's talking about there is an economic bloc that include Brazil, Russia, India, China, and South Africa. So to start off first, we already have council members from some of those BRICS nations. We have Magazine Luiza in Brazil. We have Standard Bank that's in South Africa, of course, the largest bank by assets in all of Africa. And then we have several council members in India. We have Tata Communications, we have Wipro, and so forth. So we certainly have representation from them. As far as representation from China and Russia, that can cause a different thing. I don't want to speak for the governing council here, but China, of course, and I'm not going to judge this here, even though I might judge it in other parts of my life, China has some undue influence on their companies. And by undue influence, the CCP, the Chinese Communist Party, has a awful lot of say in what those companies do. So if we had several council members maybe weighting according to their GDP within our governing council, we had 4, 5, 6 governing council members from China. Really, it's the Chinese government that would be making those decisions, not the companies themselves. And that's not really what we want to see. Maybe to a lesser extent in Russia, but we could see some similar things there as well in these totalitarian type governments. Now, I'm not saying it's completely totalitarian, but you can see some issues there. That said, of course, Hedera is an open network. It can be used by anyone, including by developers or companies in China, in Russia, and we welcome that. We would love to see that happen. That's certainly not a problem. But as far as the governance, I don't see governance or council members coming from those countries at this point. But we do have a fair amount of BRICS representation already.
Yeah, and I think alongside that, it's sort of any newer currency that might emerge, if the BRICS do create their own currency, any modern currency will have a digital form, and as we're seeing, the most efficient payment rails for that is DLT, is distributed ledger technology. And so if they want to compete on a global scale with, say, the US dollar, they'll have to have some kind of stable coin representation that can interoperate with certain crypto markets, with DeFi markets, TradFi markets, and so on. And I think that's really interesting, actually, because, at the moment, stable coins is vastly US dollar dominated. We're at the very early stages of this market. And I think stable coins really do have the potential to be one of the killer apps for Web3 in terms of going mainstream. When you look at the financial institutions getting involved, looking at the traditional financial institutions getting involved, we only really look at that within the scope of USD. Of course, we've got XSGD, the Singapore dollar. But I think, more and more countries, as they shift to these ledgers, will be bringing their own currency on chain. And I'm sure BRICS, if they have their own currency, will be doing exactly the same thing. And I think Hedera will be well situated as one of the, if not the most efficient ledgers to facilitate on-chain finance. I think it'd be a perfectly viable option. Whether that's directly through those nations or if it's done through a private company or like Circle or whatever it might be, I think there's definitely room for us to capture that exposure.
Well said, Zeb. Great points. All right, so the next one I want to get to comes from Sean Coran 2226. He said, I have a question. The low fixed fees are great, but how could the governing council change the fee structure in the future? Seems like the value of the dollar is probably 40% lower than in 2018. At some point, it needs to be at least $0.00011 or $0.00012. I think onboarding now is more important, and I know they changed the NFT fees, but still curious if there is a subcommittee that is thinking about that. So first off, there is a subcommittee that I think would focus on this. That's the Treasury Management and Coin Economics Committee. And making fee changes is not difficult. I think it's a fairly low barrier in the council. I think a simple majority, you can make fee changes. As he mentioned, there's already been changes to the NFT fee structure. When we brought the token service online, we had to establish all of those fees. And of course, if there are inflation influences or just market influences, those things are going to need to be changed. That's why we focus on having effective governance that can change things like fees. But it's a great question in general. All right, Zeb, I know we already talked a fair amount about some of our environmental use cases today, but we have an update from Dovu. Can you give us some information on that?
Yeah, so Dovu, as many of us will already know, is a carbon marketplace on the Hedera network that leverages the Hedera Guardian. Matt Smithies, the CTO there, is one of the core contributors to the open source Guardian, and they continue to go above and beyond in helping develop that. And so one of their primary goals, primary targets, is to onboard people into their carbon markets and also onboard the people that produce those carbon credits so that there is a market for both the seller and the buyer. And in order to make those markets efficient, the onboarding process of a farmer or whoever owns the carbon credits or the land for the carbon credits has to be as smooth as possible. And as I understand, this is sort of a seismic leap in that efficiency, this most recent update. They're leveraging both AI and, of course, the Hedera Guardian as a way of streamlining and optimizing that process. And so I think what this basically is enabling is for more and more institutions to come in a lot quicker and a lot more efficiently. And of course, that perfectly complements the Guardian, which the whole point of the Guardian is to make things like policy or methodologies far, far quicker, far more efficient. So it seems like the two are making this, like we said before, the home for these kind of markets. And this is the next step in that direction.
I'm a huge fan of everything that Dovu is doing, and especially Matt Smithies. He does an excellent job, not just advocating for Dovu, but for the entire Hedera ecosystem. And speaking of advocating, we've been talking a lot about, all these applications that are coming to market. And I think the job of marketing has shifted a bit. So I caught up with Christian. He is the chief marketing officer at Swirlds Labs to talk about that shift. So let's listen to what Christian had. Welcome back, Christian.
Hey, it's great to be here, Brandon. It's been a little while. Hope you've had a good summer.
It has been a little while. I've had a great summer, and it seems like Hedera is hitting on all cylinders. But Christian, just to get into the purpose of this little meeting, early on, the job of marketing for Hedera was explaining, the tech, the governance, both of which are fairly unique in the space, and of course the vision. Then it shifted to talking about the planned applications that we're building, and the teams and developers became a little bit more involved at that point. But now we have enterprises and startups launching those applications and doing their own promotions. Examples are like Hyundai, Galaxy, Fresh Supply Co. We have Karate Combat. Recently, we had Drop, and that got an awful lot of attention. How do official promotion teams like your own support this next phase going forward?
Yeah, that's a great question. And you're right, through the different cycles that we've been in. But from the get-go, Hedera had this goal to become a mass adopted ledger. And the strategy to achieve that was through enterprise adoption, right? Where they have already pent-up demand, existing customers, etc. So the goal has always been to tell the stories of the applications built on top of the network. At the end of the day, Hedera itself as a network is infrastructure. And therefore, it's really incumbent upon us to tell the stories of the applications, because that's what gets the flywheel spinning, where you attract more similar applications. For example, you referenced Hyundai, right? Hyundai is following exactly the same strategy that Avery Dennison did with Atma.io. So they're using Hedera Consensus Service, first of all, for the supply chain and to record data onto the ledger. And then the future phases will all be around tokenization of those assets and then decarbonization of those assets on Hedera itself. So I really applaud Avery Dennison for being that first mover and showing what's possible. But enterprises always watch what other enterprises are doing. And what I would say is missing from our storytelling, because it's so early, is that enterprises adopt software that do one of two things or both things, right? They improve sales, so they improve the either acquiring of new customers or the ability to sell more to existing customers, or they reduce costs and reduce costs. And so until these production systems have been running for a while, it's really difficult to get access to that data and really be able to quantify it. But in future stages, those are also the stories that we want to be able to tell.
Well said. And I mean, going back to Avery Dennison, it's always important to be first, but those first followers are important as well. So going back to Hyundai, I know that it was all supply chain and all that kind of stuff, but you're right. It is similar use cases, right? It's a big enterprise doing something in supply chain around carbon credits, and then another company doing the same thing. So
and the great thing about Hyundai is that you're seeing a giant enterprise, which is not a council member. So I think initially you have your council members as like a closed group, almost a captive audience for the technology. And, obviously we saw Avery Dennison roll out, and now you're seeing a proof point of, okay, can you get to other enterprises? And that's great. Early days, obviously, but that's a great sign. And we'll see if that can be replicated, not just in supply chain, but we're seeing similar with bank-issued stablecoins, right? So Shinhan Bank did the second iteration of the stablecoin real-time remittance, and they brought in a non-council member bank with Siam Bank out of Thailand, which is, again, great that you're seeing, non-council members. And I wouldn't go as so far as to say those are network effects today, but you are definitely seeing what could become network effects in the future. And, I feel really good about the adoption curve that we're on. Sometimes it feels like we're going slowly, but behind the scenes, there are things going on, and it's enterprises moving through all of their processes can take a very, very long time until they're ready to, both move and then also talk about something as well. So I think it's great that even though maybe it's disappointing that Hyundai wasn't loud and proud about Hedera in their own release, they were supportive of us talking about them, which is great. And then also, we see the desire from Shinhan Bank to talk about what they're doing from these proofs of concept. All these are great signs. And then you also referenced, Drop, for example. And Drop is a startup, but very enterprise centric in nature, and their customers are enterprises. So adopting Hedera, building all these enterprise centric features in to make it easy for their customers to adopt it are great things. So yeah, that was a nice surprise that popped up with that FedNow announcement.
Yeah, for sure. These are important milestones to hit. Going back to what happened with Shinhan Bank, initially they were working with another council member, Standard Bank, in their first proof of concept, but now they've expanded out and, of course, hitting up enterprises that are outside of our council. Really important milestones. All right, so Christian, how can the community help as these applications hit the market?
I think the community is doing a really, really great job in amplifying these messages. You never know where it's going to land as well, right? So, you might think, oh, I don't have a lot of followers on social media, or I don't know a lot of people, but, there are ripple effects from these things, right? It's like dropping the first stone in the pond and seeing these ripple effects. So you don't know that the person in your network might know someone else. And I love that about Web3, right? Web3, the whole ethos behind decentralization is that we can all collaborate and come together and all do our bit. And I would say, the community is doing a really good job. I think, the proliferation of spaces that there have been now on Twitter or x.com, shows like yours as well are just amazing for spreading that knowledge. So if you haven't tried it before, if you don't have a social media account, if you haven't done a YouTube video or a TikTok or something like that, give it a go if you're up for it, right? You hadn't done this, and now it's like you've been doing it your whole career. You're such a natural.
Sure. I mean, I really enjoy it, but that's the other thing. I'll see something that's posted by somebody that might just have a few followers, and then I'll amplify it, and then maybe that gets picked up by Ryan Solomon and Genfinity, and then that gets picked up by Hedera, and it further gets amplified. So that's how this thing works, and we appreciate.
By the way, Brandon, I would say as well is you at the stage of growth that we're at now with this, feeling like an inflection point, whether it is or not, I guess we'll zoom out at some point. But it used to be, and you remember these days very well, you'd know every single person in the community, and you'd know every single project that was building in the community. And now there's just so much going on, it's really not possible. So collectively, we all have the data, but don't assume that because you found something, someone else knows it, because they may not.
Great point. All right, Christian, you mentioned in the beginning, it's been a while since we've had you on here. I think at least about 8 months or so. Is there anything else you'd like to pass on before we let you go?
Well, a couple of things. I'm going to Stanford this evening. I don't know when your show will drop, so maybe it'll be tomorrow. If it's tomorrow, I went to Stanford yesterday evening. Lehman is giving a talk there around decentralized recovery and custody. That is an amazing innovation from Lehman that can be of benefit to the whole industry, right? Not just the Hedera ecosystem, but the whole broader ecosystem. So very excited about that. And then next week, I'm off to London for Hedera's committee co-chairs and Hedera staff, and then a couple of people from Swirlds Labs, HBAR Foundation, Hashgraph Association are partaking in leadership meetings in London next week that will really sort of bake the strategy and programs moving forward in 2024. So I'm excited about that.
Yeah, it's exciting stuff. So, Christian, thank you so much for coming on today, and I'm looking forward to continuing this ride for you. It's been a blast at this point, so thanks again.
Thank you for having me, Brandon, and thank you all the H-Barbarians out there.
All right, so it was great catching up with Christian. Before we get to our next topic, I do want to say thank you to David for sending me this shirt. It was nice to see when Mac's song came on, we had similar shirts for the two things that we were trying to promote, but it was fun to see that. I've been getting a lot of different swag and stuff from all different entities in the space, and I really do appreciate it. I got some from Earthlings this past week. They sent a shirt, and then they also had a comic book. So they're doing similar things that Lithos is doing, putting out some additional things as they build out their gaming metaverse that are really fun. And, they're doing a great job with community engagement along with many of the other builders out there. And I'm going to try to show it off as much as I can. All right, we're going to take one of our hard left turns here. I managed to watch the Gossip About Gossip this week on Archax, and it had some really fantastic insights. I want everybody to go watch the entire thing, but I did want to grab a few highlights to show off in here. So let's listen to what the Archax team had for us.
So can you talk a little bit about what the customer experience is like in Archax and what kinds of services you're offering today for customers?
Yeah, probably the starting point is maybe to touch on the regulation that we have in place, because for us, regulation is key. For the last few years, we've always been talking about the regulation we have, the regulation we're getting, because we thought that was key. And in fact, what happened in the crypto markets last year and into some of this year just highlights the need for a regulated approach. But the regulations we have, so, we're based in London, although it's a global initiative at Archax, we're regulated by the FCA as an exchange, a broker and custodian. And we're on their crypto asset register as a VAS, a virtual asset service provider as well. And those regulations give us what we need to launch. I mentioned earlier, we're kind of rolling out products this year. We kicked the year off with our custody solution. So we're a fully regulated custodian here in the UK, qualified custodian in the US. And the regulations that we have mean we can custody everything from, unregulated assets like Bitcoin, HBAR, and other sort of crypto native instruments. We can hold regulated tokens as well, like tokenized assets, tokenized real world assets, tokenized funds, real estate, debt, equity. We can hold traditional instruments also. And we can also hold client money as well. So we're fully, quite a broad range of custody services, and we're busy onboarding people onto that custody service now. We have circa 100 million of assets under custody. They're in place or coming very soon. And we're kind of finding that even though many crypto assets remain unregulated in many jurisdictions, actually being a regulated custodian and people knowing that you're operating the service as a regulated custodian, regardless of the asset in question, is quite an attractive place to hold assets. It's a safe harbor. So the custody service is progressing well. Soon after that, we launched our primary market. So this is a market where we can help firms raise money. We've got around, I think, 7 or 8 issuances up on our primary market at the moment. We've helped one firm close its raise. We've got another couple that we're helping with. So we can help on that sort of fundraising journey for either digital issuances or regulated issuances, but they tend to be fintech or crypto-related firms. We also have our tokenization engine we launched earlier this year, so we can create tokens on a range of protocols. So we have that ability, to help firms raise money, to create the tokens that they wish to have, and then to custody them also. And then the final piece, which is launching at the moment, is our exchange. There are 2 markets on the exchange: an unregulated market with cryptocurrencies, pure cryptocurrencies on spots, and then a regulated market, which is where sort of, tokenized real world assets can sit and trade. So we kind of have both those pieces too. And alongside all that, we're kind of looking at, creating some of our own digital structured products, tokenized products as well. So, as well as being a marketplace for people to come and list, we're also creating issuances that we think will be interesting to institutions generally, because our focus is very much institutions or professional investors and above anyway. And it opens up all sorts of interesting possibilities. I mean, you only have to look at what's being pioneered in the DeFi space at the moment and think, well, if we could actually package up regulated traditional financial instruments and take advantage of some of those DeFi offerings, then that unleashes a whole world of opportunity also. So, it's an exciting space right now.
A few weeks ago, we saw an announcement with Archax and Aberdeen. Can you walk us through that relationship?
For sure. I mean, the relationship with Aberdeen started a while ago, actually, maybe even 2 years ago, when they are pretty forward thinking and they could see that the future of their world is digital. But weren't sure exactly how to get there or how long it might take, but realized if they didn't get on the journey, they might get left behind. So they actually started working with us on kind of like a proof of concept to tokenize funds and to explore that side of things. So the relationship with them started on, exploring tokenization of funds, basically. And as that project and that relationship moved forward, and we started to raise money. We did a Series A round last year. They expressed an interest in investing in the business. It was a close relationship. They wanted to be more closely involved. So they ended up investing in us last year. They're now our largest sort of external shareholder. So we have a very close relationship with Aberdeen. Not exclusive, by the way, and they're very happy for us to work with other asset managers than we are, because that's vital for our success, but obviously very close with them. They're on the council of Hedera as well. They're big believers in the sort of ESG credentials of the protocol. And Hedera actually, being totally open, are an investor through grants in us as well. So, we have a close relationship with Hedera. We have a close relationship with Aberdeen. Aberdeen have a close relationship with Hedera. So, certainly the 3 of us working together on some projects. And the first of those actually was to create a sort of tokenized version of their multi-billion-dollar money market fund. And that's something we completed quite recently. A few weeks ago, we announced it. I think that just heralds what may come next, creating these sort of digital representations of very traditional instruments. And actually, the Aberdeen Money Market Fund is interesting because, at the moment, maybe you're a hedge fund trading crypto, trading Bitcoin, and you want to go risk off, then really you end up sticking your money in a stable coin because you don't want to bring it back out into the fiat system particularly. But actually, the Aberdeen Money Market Fund in token form is a pretty stable institutional grade product, and it generates a yield. So it's an attractive instrument to have at your disposal alongside others. So the technology and working with people like Aberdeen is sort of allowing us to innovate and create interesting products of our own, and with partners like Aberdeen, which we think will be very compelling for people to use. It presents all sorts of efficiencies. I mean, tokenization is a much more efficient way of handling financial instruments. When it comes to things like, not just relevant to funds, but relevant to all financial instruments, handling things like corporate actions or dividend payments, or, you can kind of airdrop things to wallets. You can do things in a very efficient way. You can have a connection directly with your end user investor in a way that kind of gets masked in the traditional world. So, it opens up all sorts of interesting opportunities.
Right. And the speed of that too, right? It's not hey, you have to wait 2 days for a confirmation.
That's very true as well. And actually, in the case of funds, sometimes if you invest in a fund, your money is tied up until the next redemption cycle, the next window when you can do something. If you can create a tokenized version and have those tokens traded on a secondary market like Archax, then, you can trade outside of redemption cycles. Your money isn't tied up necessarily as much as it would be in the traditional world. And that's quite attractive to portfolio managers too, because it gives them a permanent source of capital without them having to worry about redeeming something to fulfill a redemption request. And so again, interesting kind of innovative possibilities and opportunities. In our custody solution, we, as well as providing custody, we also facilitate staking for yield returns as well for Ethereum. And we're just adding that in for Hedera as well. So you can do HBAR staking and generate a yield.
It's amazing to hear quite how much Archax are doing. But I think also one of the most impressive things to really highlight is that they are the first ever digital securities exchange regulated by the FCA in London. They're doing everything by the book. They're doing everything by the regulators in a kind of regulatory environment that is pretty unclear in the UK currently. We're trying to sort of front run these positive crypto developments, but the fact that Archax really is at the forefront of this, almost pre-regulation, I think is really, really exciting and gives us a lot of early footing in the door. And of course, that's compounded by the size of Aberdeen and the enthusiasm of Duncan, who is our governing council member there. And so I think, when you mix that with DLA Piper, of course, the London-based law firm, global law firm, but main offices in London, it seems like we have a very strong foothold in the UK. The UK is one of the hearts of finance globally. You've got New York, Singapore, Hong Kong, London. I think it is really, really great to see how we're doing everything by the book, especially in these securities markets like Toko, like Archax.
And considering they are trying to do everything by the book, it is good to see that they're also supporting things like HBAR staking. So that's good, because I don't think they would be doing that unless they thought they could do it in a compliant way. All right, so the next subject we wanted to get into is one of our Web3 tooling providers, and that's Archaia. Can you tell us about what they're doing with Sentient?
Yeah, so Archaia are one of our leading RPC node relay services. I think also mirror node as a service providers. They work with some of our biggest ecosystem projects. And I think earlier this week, they announced that they are integrating with Sentient, which is one of our leading, fastest growing NFT marketplaces alongside Zeus Market. So great to see that relationship there. Great to see Archaia maintain its position as the leading RPC node relay and mirror node as a service provider there in terms of ecosystem adoption.
Yeah, no question about that. And hopefully we're going to be able to get a Twitter space with that team here before too long. We've been sprinkling our gaming ecosystem throughout this entire episode. And the next thing was Legends of the Past. What can you tell us about what they're working on?
Yeah, so Legends of the Past, they're building hard. Baz, founder there, I speak to very regularly. He's shown me some interesting in-game footage, which looks great. Shown me a trailer that looks really cool and lots of different assets. But they've got one of their character mints, which is their first character, Cleopatra, based upon, and that's coming out, I believe, in the next few weeks. So Baz is very excited. The team's very excited over there. The NFT looks great. I've seen what it looks like. So definitely want to keep excited for there. And again, great to see our gaming ecosystem seeming to pick up a bit of pace here.
And I'm doing an interview with Baz just next week, so we're going to get some more information on that as well. All right, so with that, we'll go ahead and get into some network analysis. Now, Zep, I'm just realizing this, but it looks like we just broke a new record for transaction volume over the past 24 hours at 132 million. That's an average TPS of 1.53 thousand per second with a max TPS of 3,333.
20 billion is almost coming this weekend, I think, which is insane. I don't think anyone was anticipating us to sustain such a high TPS like this for this long. I think, of course, we were speculating upon it for a long time. And to know that this is the first high-scale use case of this kind, i.e. ATMA, along with other ecosystem projects, can facilitate this is exceptional. And for us to break that record is an amazing thing for celebration, for sure.
Yeah, it's impressive for sure. Over the past week, we've averaged over 1.4, and we have 858 million over the past 7 days. Those numbers are huge. We're really starting to push a billion per week. And Zep, all that with a time to consensus, a time to finality of 3.89 seconds. And moving down to our fungible tokens, in the top spot, we still have Wrapped HBAR. Number 2 is Zero, one of the meme tokens in our ecosystem. We have Energy Trade Token because of their faucet, Sauce, Dovu, USDC, Not a Protocol, HeliSwap, XSauce, and another version of Wrapped HBAR round out the top 10. And looking at our NFTs, the Road Code Access NFT takes the top spot with over 12,000 transactions over the past week. The Earthlings Backpack is in number 2. The Pepe NFT is in number 3. And then some of our usual suspects round out the top 10. Zep, do you have any thoughts on NFTs this week?
Yeah, I think it's great to see these sort of consumer engagement use cases that leverage NFTs like Road Code really starting to scale up there. You know, for a lot of people, consumer engagement is going to be one of the biggest drivers of NFT adoption. You know, whether that's what we saw with Nike Swoosh, whether that's what we see with Road Code, whether that's what we see with people like AR Rahman as that begins to progress in the future. We know that NFTs are a way of augmenting a pre-existing audience, making them more engaged and bringing them on chain. And in this case, with Road Code on Hedera this week. So I think we're going to see more and more of that. I'm excited for that to ramp up.
Yeah, it's getting more and more exciting on that consumer engagement front all the time. All right, with that, let's go ahead and get into some DeFi. Taking a look at DeFi Llama, not including state or liquid staking, the Hedera DeFi ecosystem total value locked is just over $31 million. Saucer Swap makes up over 26 million of that, 4 million on HeliSwap, and we're down to 400,000 on Pangolin. Taking a look at the farming rewards on some of Saucer Swap's popular trading pairs, 7% on HBAR HBAR-X, 27% on HBAR Sauce, 33% on HBAR USDC, and 38% on HBAR Karate. On HeliSwap, HBAR HBAR-X is at 5.4%, HBAR Heli is at 72%, HBAR USDC is at 33%, and HBAR Karate is at 39%. Looking at the crypto and HBAR markets, I'm surprised to see Bitcoin down 3.2% over the past day and 1.5% over the past week. Not to put on my tinfoil hat here, but it seems pretty crazy to me considering other risk assets like stocks have been holding up pretty well. It almost feels like manipulation considering how bullish the recent crypto news has been. Who knows, but the impact of a Bitcoin ETF can't be overstated. Much of the massive run-up in gold, the decade following its own physical ETF in 2003, can be attributed to the ETF, in my opinion. I think we can expect significant inflows into Bitcoin once an American ETF launches, and those that are selling BTC to the ETF are likely people that will redeploy that capital into the rest of the crypto ecosystem, HBAR included. Still, in the short term, in my opinion, in part due to the downdraft in crypto and in part because of the false narrative around the unlock, HBAR has struggled this week, and at the time of recording is at 4.9 cents. We broke key support at 5 cents, which may become an area of resistance going forward. In terms of support, I'm looking at 4.6 cents. Now, I want to be ready for any drops this fall until the Fed flips dovish. Following the old adage, don't fight the Fed. But once that clears, I really couldn't be more bullish on the entire crypto space, especially HBAR. All right, Zep, that's pretty much all we have. Is there anything else you'd like to pass on?
I think for me, this week is the week of carbon, the week of on-chain climate finance, and the week of the Hedera Guardian. You know, having seen the first or the next rather carbon registry come online, knowing that the trend is for these carbon registries to go on-chain, to know that the first big one outside of the legacy registries has chosen Hedera in the background, knowing that Vera and Gold Standard are in the conversation there, knowing that Dovu is scaling up its carbon efforts, and knowing we've got big events like COP28 coming up, Africa Climate Week, New York Climate Week. I really think this is going to be one of the biggest things that comes out of Hedera, at least in the next sort of 10 years or so. Every single company in the world is ESG focused. Every single company in the world has aggressive sustainability mandates. And we know that we have the perfect pool of partners, i.e. some of the biggest organizations in the world, that we can immediately handhold into our ecosystem to lay the blueprint so that not only they can deploy on chain, but some of the biggest companies in the world that follow them, like Hyundai, like Kia, can learn from them, see the value, and make their own deployments from outside of the council. I don't think we can understate how big this is, and I think it's only going to keep escalating from here, and we're at the very, very early stages of what is projected to be a $1 trillion market, and Hedera looks like it's going to be the home for that on-chain. So a massive week for the Hedera Guardian.
Multi-trillion-dollar market, but Zeb, it was really well covered. I don't have too much to add, but I do want to tell everybody again, if you want to go down to the Dominican Republic for Karate Combat 41, let me know. We'll see if we can get you guys engaged down there. And beside that, if you have any questions for me and Rob, go ahead and drop those down in the comments. That's all we've got. We'll see you next week.